Hi, Byron Moore and Mike Jones here with Argent Advisors. It's Tuesday afternoon, June the 23rd, and as Mike and I were talking before filming this, we realized it's been right at about 3 months since the governor of Louisiana issued his stay-at-home order. So 3 months doesn't sound like a long time.
It's been a long
but
one.
It seems like a very long time
yeah.
since this whole coronavirus has hit us. And one of the things, Mike, that we talked about earlier that you saw that I've got here in my hands is a story that describes what a number of seniors did with their stocks at just about the worst time.
Yeah.
What happened?
Well, I was just perusing some articles, just kind of flipping from one thing to the next, and then this headline grabbed me that 1/3 or 33% of all seniors in America during the meltdown of the market most recently sold 100% of their stock holdings.
A third of all seniors sold 100% of their stock. That's amazing because who has most of the money in America? It's the seniors for the most part, and for a third of them to have cashed out, that wasn't a plan, was it? That was a reaction.
And we've had discussions with clients and amongst ourselves in the past that when things just get stressful, it's very easy to push the panic button and sell everything.
So for years you have said that there's two really big decisions that any money manager has to make. So whether that's a professional money manager like you or someone that's trying to manage their own money, the first big decision they have to make is when and if you're going to sell any asset security that you own. Okay, and you said that's the easy one.
Very much.
Because the hard decision is then what?
Yeah, when and if do you buy again and at what levels? And so when faced with that decision, the article didn't go on to say, but I can almost assure you that most, if not all of those people have sold things toward and near the bottom, and they're still sitting on that cash.
So, tragic story. So give us a little update on kind of what has happened in the market. It's been 3 months and about a month since the last time we had one of these visits. So recently in the last 30 or 40 days, what has gone on in the economy and in the markets that would be kind of relevant for folks to know?
Well, Byron, there are two things going on. They are related to each other, but they are different. So one is the markets. Well, the markets are always forward-looking, and so they actually have performed very well, even much better than any of us around here would have guessed. The economy, and this is the good news, probably from which the market gets its cue, is bouncing back. And we're going to share some charts with you here in just a moment on this video. And what you will see is there was such a deep dive. When the economy was put in lockdown mode, there was such a deep dive. And especially when you think of airline travel, when you think of hotel reservations, when you think of restaurants and the bookings there. And what you'll find is that they hit a bottom and that they have actually started coming back up. And some of them quite well. I think driving miles, the amount of miles and the times that people are asking for directions on Google, we track that. And so that's almost back to, if not back to, where it was in March. Early March. Hotel reservations went down from around 60% to 20%. They're back above 40%. And so if you would, just take a look at these charts as we put them up there, and you can see that we're not back, but we're making a comeback.
And how have markets responded to the economic activity then?
I think that the bond market has stabilized. And so, it had those, we talked about in our previous sessions, it had those really scary days. It has stabilized. And then going sideways of late. The stock market has come back to not quite all the way where it was earlier this year, but a good bit of that has been recovered. The area that has struggled to date is still the big blue chip dividend paying companies. They took it on the chin. They have come back. They haven't come back quite as much as the others, but I think in time they will.
Good. So I can attest that in the early days of the coronavirus crisis, Mike was coming in early and staying late and working on these things. As things have stabilized, if you give this guy much time, he's either going to ride his bike 60 miles, read another book about St. Augustine, or find something else interesting to do on the investment front. And so one of the things that he has gone out and acquired for us is a risk assessment tool that we have begun incorporating into some of our work with clients, because the level of risk and the need to assess risk at a really deep level has become even more pronounced than ever. So Mike, I'd like you to tell us just a little bit about this tool. What's it called? And tell us just a little overview of kind of how we're going to be using it with our clients.
Sure thing. So the name of this tool and this software that we have begun incorporating is Riskalyze. So it's to analyze risk, and therefore the name Riskalyze. What I like about it is that it actually builds a risk assessment from the bottom up. It takes every single security in every single pool that we have, mutual funds, whatever, and looks at every one of them and builds a risk assessment from the bottom up. Because of that, we have a high degree of confidence that when it assigns a risk number to a particular portfolio, that it is as accurate a thing as I've come across. Okay. So it gives confidence that yes, if you're looking for this level of risk and match it with this portfolio, that if those two numbers are close, that you really have hit the nail on the head.
So have you seen some situations where someone thought they had one level of risk, but surprise, they really had another?
Yes, and very common when people are coming in now, or we're talking to them on the phone and we're looking at their 401k or assets they have away that they're kind of picking and choosing. And yes, we've been able to see, oh, you're this number, but your account is this number, and we've got to make some adjustments to help them out in that regard.
Right, so we've actually got a little video that we've prepared. We're going to show you right now, and that'll give you a quick overview of Riskalyze. Did you know that human beings are twice as concerned about avoiding losses as they are about achieving potential gains?
That's one of the reasons human beings tend to sabotage their own investing, selling when they get scared, missing the recovery, and buying back in when the market feels safe again. That's why we use Riskalyze. It all starts with a risk number, a quantitative way to pinpoint how much risk you want, how much risk you need to take to reach your goals, and how much risk you actually have in your portfolio. The results are powerful. So how does this work?
First, you need to pinpoint just how much risk you want, and the old way, by stereotyping investors based on their age, just doesn't work because everyone is different. We may use a questionnaire, or we might use a discussion of your portfolio risk to set your target. Once we determine your risk number, we'll set up your portfolio. We use your portfolio's risk number and a 95% probability range to set expectations for what is normal for your portfolio. Keeping track of your investments in this way helps you to understand that in 6 months, results that fall within a range are right on track. This enables you to give yourself permission to hang in there, even if markets are volatile.
You're going to love how Riskalyze empowers you to become a fearless investor. Let's get started today.
All right, so Mike, how do we plan to use this tool with clients in the coming weeks and months?
Well, there are a lot of things that I'm learning about how to use it, but the two primary ways we want to employ it is, one, we want to use their questionnaires and their assessments with clients as we do our periodic reviews. Okay. To get a number, a risk profile using this tool on them. Okay. Then the portfolios that we design for the different objectives that we're trying to achieve investing the money, those portfolios get a risk number as well.
Okay.
And so we want to make sure that the risk number for the client and the risk number of the model or the portfolio, if not the same, are very close to the same, or we've got to have some discussions about what's going on.
All right. So we'll be utilizing that process with you in the coming months, and so as it comes your time to be called and brought in, or a Zoom call if that's your preference, we'll be using this Riskalyze process with you. If you're an eager beaver and you just want to know what your number is, give us a call. We'll send you an email with a questionnaire, and we can even start that process early.
That's
But
right.
thanks for listening. As always, if you have any questions, call us, send us an email, whatever best way of communication you'd like to. We're happy to hear from you at any time, and we'll be in touch soon. Thank you.
Thank you.